Hello and welcome. In this video, we will learn what an NFO is and also we will see how is it different from an IPO. Alright. Now, first let us see what an NFO is. NFO stands for New Fund Offer. You all know what mutual funds are, correct? When a mutual fund house or an asset management company decides to launch a new mutual fund scheme, they make a new fund offer. Okay? New fund offer is an introductory offer of a mutual fund scheme. This NFO provides investors with an opportunity to subscribe to the fund early and get more returns. Okay? An NFO allows a mutual fund house to raise the money required to purchase the stocks or debt instruments. Alright? AMCs or asset management companies generally offer a subscription period which is between 10 and 15 days for customers, and it is also given on first come first serve basis. Alright, so basically NFO is offered by a mutual fund house when they decide to launch a new mutual fund scheme. Okay, now NFO means new fund offer. People often confuse new fund offer with IPO, initial public offering. Alright? People think that both NFO and IPO are the same thing. But remember that both are different and they are in no way same to each other. Alright? So let us see the major differences between IPO and NFO. I have listed out only 4 differences, but apart from these there are many others too, which I think you will learn along your journey in the stock market. Alright. Now, first, the IPO is issued by an organization or a company. And you know that too, correct? I had made a video about IPO where I had explained the concept of it. I hope you have watched it. If not, please do. Now, this IPO is offered by company or organization, whereas NFO is offered or issued by mutual fund houses or asset management companies. Okay? So new fund offers are issued by mutual fund houses. Now the objective of issuing IPO is to expand. There is a company which is working fine, but then it wants to diversify. It wants to expand. It wants to have plants at different locations. It wants to start different kind of operations there. It wants to hire new peoples. It wants to acquire something else. So to do all these things, the company needs money. And to get the money, they go for IPO. So this is for making more profit, I can say. Alright. So that may be one reason. One more reason may be to clear the debt they already have. You know that a company can get money by taking loans from various institutions or banks. And sometimes having too much debt in the accounts doesn't look good to the investors. So to clear this debt, the company may go for IPO. The money that they get from IPO can be used to clear the debt that they have. So these two are major objectives for a company going to an IPO. Okay, there are other objectives too which I have not listed out here, but let us not go there. Whereas if you consider NFO, it is to invest in the market. The objective of an NFO is to collect money from various people, to pool in money from various sources, and then to invest that particular money in the market. So the objective here is completely different. This is to expand, this is to clear the debt, whereas this is to invest the money that has been collected from various sources or various people in the market. Okay. Now what these fund houses can do is they can collect the money from various peoples through NFO, and then they can use that money to go and buy stocks in an IPO. Okay, try to understand. So here they want to collect the money from various people. After they collect money from various people, they take that money, they can take that money and buy shares in an IPO. Let us say some company is having an IPO. The mutual fund houses can apply for the IPO for that company and buy shares from that particular company. Okay? But then vice versa is not possible. The company, after going for an IPO, cannot take the money that they have received in an IPO and take the money and buy out NFO or apply for NFO. That is not possible. Okay, they won't do that. That is not their objective. Okay, that is not their aim. So the money that they get from IPO is used to expand, to clear debt, whereas these people want to invest in the market, and investing in IPO is one way. Okay. Next is the pricing. IPO pricing depends on the valuation of the company. I have taught this too in my IPO video. Alright. So we cannot say this is this much, this is 20 rupees, this is 100 rupees. We cannot say that because it depends on the valuation of the company. Whereas generally NFOs have a face value of 10 rupees. Okay. So they have units, and generally they offer it at 10 rupees. Okay, 10 rupees. This is their price. Next, if we want to go for, or if we want to apply for an IPO, meaning I'm a retail investor, I want to apply for the IPO, meaning there is a company which has issued IPO and I want to apply for the shares, meaning I want to apply for the IPO. If I want to do that, I have all the details regarding the company available with me or to me, meaning I can know what the company is doing, I can know why the company is going for an IPO, I can know what or how the company is performing before I apply for an IPO, before I invest my money on an IPO. Okay, so the history of the company is available, whereas NFO generally they bring out thematic funds, okay, construction or green energy, such and such, all right, technology and so on. So when we have new fund offers, we do not have anything to compare the new fund offer with, all right. So here we have previous performance of the company. Here we do not have anything. All we can do is we can look at the other funds that the fund house is managing and see how much return it is getting before we apply for an NFO here. Okay. So that is the only option here. Alright. So that is about NFO and IPO. Both are completely different. Both are issued by completely different entities for different objectives with different pricings. Alright. So do not get confused with this. Alright. I hope it is clear. So I'll see you in the next video. Till then, take care and thank you for watching.